It is a big week for tech. Apple, Amazon, Alphabet getting ready to report their latest quarterly results. We've already heard from the likes of Snap, IBM, and others. Well, joining us now for more on the big takeaways so far, Jim Kelleher, Director of Research from Argus Research. Jim, a pleasure to have you on the program.
Thank you. Good morning, and happy to be here, and thank you for having us.
All right, so let's talk tech. Obviously, this is the big week for some of the mega cap tech stocks, but we've seen some earnings so far. What's your big takeaway? What feeling are you getting from the sector this quarter?
I think the sector will probably outperform expectations a little bit. There's a feeling that technology earnings in the United States will be down slightly. I think they'll end up being up slightly. Recently, IBM reported they're a pretty good example of the kind of head fake you might be getting with earnings. Their adjusted earnings were reported down about 2%. However, that purely reflected the fact that IBM had a tax benefit a year ago and a big tax bill this time. So if you look at their adjusted pre-tax income, it was up a very nice 20%. But that's not the number that gets reported, and that's not the number that gets counted. But I think you'll see overall, this is, as you mentioned, it's a big earnings week for not just formal technology sector names, but other big names in consumer discretionary like Amazon and like some of the communication services, media stocks that one time were all considered tech stocks. And I think they're all going to do fairly well this time around.
Obviously, it's been a pretty tough market across most asset classes. Tech has been hit very hard after the big run-up we saw during the pandemic. I guess one of the concerns was, the strength of the U.S. dollar. That a lot of these big companies do a lot of business overseas. You repatriate those foreign currencies into U.S. bucks, and it's not a good thing. Has the market sort of priced that in already? Because it's been pretty clearly communicated.
That's a great question. I would say that you have two countervailing effects here. One is that inflation does have we call it a dirty little secret, and that is it tends to lead to pretty good revenue growth. So we've seen revenue growth tending to run ahead of earnings growth in recent quarters, running up in the upper single digits, whereas the earnings growth has moderated to that kind of low single digit area. And that's because companies are succeeding in passing along costs. But for the US based large multinationals, currency is a really difficult problem. It's running at 600 to 800 basis points negative on currency for some of these companies that have the IBMs of the world that have or Intels that have 60 or 7% of their revenue derived overseas. So I think the inflation impact on the upside to revenue is pretty much being a little more than offset by the currency headwind. So I wouldn't call it a neutral event, but we are continuing to see earnings growth. We are continuing to see revenue growth, which tells me that despite the currency repatriation headwind, there's some pretty solid sales growth out there.
In terms of the technology space, it is a big one. It encompasses a lot of different kind of companies. As investors, do we start separating those who perhaps sell software or cloud services from those who sell hardware to those who rely pretty heavily on online advertising to make their models work?
Yeah. Right. So it's a very big tent. And so because it's a big tent sector, you need to look at all the different parts and pieces. We've been seeing pressure in the online advertising space going back, a minimum of 6 months. And for those social media and search companies that are dependent on digital advertising spending, the pressure has been real. Also, many, if not most, consumers access social media sites such as Snap or Twitter on their phones. And in North America in particular, where iPhone is dominant, there have been changes in iPhone's, the iOS advertising tracking practices from Apple. And these have been a real headwind. These were announced as much as more than a year ago, really, and Snap was among the first to call them out. But it's impacted Twitter and Meta and all the social media platforms. So the lack of advertising tracking, so to speak, has, privacy, it's a legitimate privacy concern, has made companies more reticent about expanding their online advertising sales. And now we're coming into a more challenging economic period, and companies are really taking their time to think about, where do they want to allocate their digital ad dollars? And, if you dive into the Snap numbers, you would see that the advertising per user is coming down for them.
I'm one of those iPhone users that when I'm asked, well, can we track you across the internet? I say no. And I've been saying no for quite some time. And I figured at
Yeah.
some point, and maybe there's just being a little jaundiced in my view, at some point they're going to figure out a way around this and still figure out what I'm up to. But it sounds like so far at this point, not being able to track those eyeballs across the internet for advertising dollars, they haven't figured out a way around that sort of problem.
Well, both both Twitter and Snap have said they are working on workarounds to make sure that without violating user privacy, they're still giving their advertisers a bigger read on which of their where their ad spending is effective. The bigger issue right now, I just think, is economic. If you were to look at Snap's numbers, for example, they grew their user base pretty nicely uh, in the third quarter. Up off the top of my head, I'd say they grew it in um, high teen percentages year over year. The number of users up around 363 million, but their advertising revenue grew 6%. And if you look at the ARPU, the average revenue per user, it's really in a downtrend, like particularly in Europe. And that again, there could be a currency impact there as well, probably is. Um, but that was negative year over year and sequentially negative too. Another issue for them is the greatest growth Snap is having is in rest of world. It's more than, or it's roughly about half their users. But the average revenue per user in North America is 10 times the average revenue per user in rest of world, that meaning outside of US and Europe. And that's a big problem because they're getting these, you can almost call them empty calories, adding all these users that aren't bringing a lot of revenue dollars. So, and the fact that Snap suspended their revenue guidance for 4Q tells me we're going to see even deeper declines in average revenue per user.